What's good, YouTube? Welcome back to the Stock Hustle channel with your boy William. Today is Thursday, November 11th, Veterans Day. As always, guys, nothing that is discussed on the channel is financial advice. I'm simply providing people financial education that they can hopefully then use to understand they don't have to slave in a 9 to 5 if they don't want to. You could easily hustle 24/7 in the stock market and still be able to accomplish all those financial goals, dreams, and aspirations you've set for yourself. Is that with anything else in life, you're going to get out whatever you choose to put in. But let's go ahead and put some work in for today's video. So as you guys see from the top left corner, this is going to be LYFT, LYFT, otherwise as the other car share service comparable or competitor directly to Uber, right? So this is a 2-year breakout. Essentially, LYFT hasn't been trading for 2 years, right? But essentially they went public officially November the 11th, 2020. So tomorrow, or excuse me, today as you're watching this video on the 11th, marks the 2-year anniversary that LYFT has been trading publicly. Now, before we get into any other details, they just recently had earnings reporting. We do want to touch base on this really quickly. Specifically, they reported essentially estimated would be minus 55 cents per share. They actually reported minus 21, so they narrowed their loss dramatically, which is a beat. Specifically, I also took the liberty of pulling the earnings report. Q3 revenue, as you see here, 864 million, which is a growth of 73% year over year. So not only did they narrow their loss, they also gained $864 million in revenue. Two very bullish signs for a car share company, right? Especially having dealt with the pandemic, essentially, over the last 2-year period. Well, essentially they've only missed that pandemic by 6 months. Yeah, November, December, January, February, March, 4 months, excuse me. Only 4 months since going public did they have to start dealing with the pandemic, and even through that, they still grew 73% year over year. That is super bullish in my opinion. Again, nothing that I say on these videos is fact. It is simply my opinion. But now let's break down the chart, and then we'll get into some other things that I want to talk about. So as you guys can see, the volume profile is spread across the candles on the backside, so that you can see where the highest concentration of volume is. Blue line to blue line is the 70% concentration of volume, or where the majority of the volume is. The deep red line is the point of control, the highest concentration of volume where it is located. As you see, the point of control is in the 30s. The lower shelf is at the 22, and the higher shelf is essentially at 51. So you have a pretty good range there. Looking at the ticker, pay attention to where it is traded. As I've stated to you guys in videos before, anytime you are trading above the point of control, it tends to act as gravity and pull you down towards it. Anytime you are below the point of control, it tends to pull you up towards it. As you guys have seen, it essentially consolidated on the point of control from March, the start of COVID, all the way essentially through November 6th. So dang near the whole year, essentially. It traded on the point of control. Before it had a little breakout, as you guys seeing, heading to the top point of this volume shelf, where it had essentially lived since February of this year all the way through current 11.9. As you guys see here, most recently we have bounced off the higher volume shelf, and we are now trading essentially at $54.60. Well, the reason why I selected this play today, well, actually, before I do that, let's label our friends. As I always say, the trend is your friend. So if we do some trend lines up here and label these designations, got some pretty good respected trends. Got another one down here. We can kind of identify something. I think it's there. There, yep. So as you guys can see, this is like a little upper wedge, right? Kind of nice little wedge formulating, respected on both top side and bottom side. Pretty interesting to see. And we've been essentially bouncing up and down, you know, in this little wedge up here, right? In anywhere from the 40s to the 50s. Well, the reason why I'm actually even bringing up Snap is because it actually alerted today, and I had already been thinking about LYFT, because again, I had been hearing a lot of usually bullish articles on Uber. Anytime you get bullish articles, usually their competitors of those companies usually get sympathy lifts. And as you guys can see, it did have a nice little push to the top side recently before today's very red day that we had due to inflation scares. But essentially this was on a rip to the top side, essentially getting ready to break or ellipse 56. So let's take a look and break down the alert specifically on unusual whales. So going into the whale alerts, going by ticker LYFT, you see that we did have today specifically a put at 6750 alert. This one came at 1:04 p.m. You had a call. This is the one I saw, and this is the one I actually shared on Twitter and IG for 11/12/21, which is tomorrow, or excuse me, Friday, and this came at 8:27 in the morning. Now take a look at the volume versus open interest. 4,375 volume on 198 open interest, right? Specifically, if we go into the alert, which I've already taken the liberty to take a look, the green line is the underlying price of LYFT, the blue line is the ask price, and then the orange line is volume. If you've seen some of my other videos, I like to do this because I like to interpret what tickers do. So for example, this ask price rising so high, why? The volume was low, the ticker price didn't necessarily go that high. We went from 45 essentially to, I guess 53. So I guess that's why the ask price, but then all of a sudden you see this fall off on the ask price, dipping to as low as $9 a contract before spiking again. And then this is when you see the volume dramatically increase, essentially at 8:03 in the morning. And that's actually when the alert fired. As the ask price went down, the alert went off. And then at the end of the day, essentially these contracts were going for $7 or $8 essentially, right? But as you see, the volume has dramatically climbed specifically. So let's take a look at the 10 biggest trades. So what do we have? We have a buy call for Friday's expiration date at what strike? You see the 61 being predominant, right? At what amounts? 5,000, 4,000, 4,000, 5,000, right? Only two bearish bets or two bearish trades. Sold call at 61 and another sold call at 61. So that is pretty bullish in itself. Having a sold call and a bought call for the same strike means you could be playing it both ways. This is probably what grasped my attention the most when I was digging through this alert in the morning. We went from essentially no volume at all, a little bit 170, 277, right? Little peaks here and there, right? But remember, look at the open interest. It was comparable, right? Yesterday we had, or day before yesterday, we had 32 volume, and then all of a sudden today, 14,400 volume spike, just like that. That is unusual. That is the premise or the whole fundamental idea behind Unusual Whales, finding unusual activity. So shout out to Unusual Whales. I love your guys' tool. I will use this tool until I stop trading in the market. I swear. I won't ever stop using it. But dark pool trades, and then you see we have some congressman. What is this? Josh Gottenheimer making some purchases in the Senate. Again, not really relevant that I feel it's relevant, but again, I think it's pretty cool that Unusual Whales even publishes that. So we're going to go into the flow automatically by LYFT, excuse me. We're going to take our filters. I want to ask only 25,000 premium, nothing else turned on, and I want to see what our chart shows us. Well, let's take a look. Obviously, you see that for 1119, we are extremely bullish, right? And at what strikes are we alerting? The 40, the 50, the 55, the 60, and then obviously the 6750, but that is bearish. You see that the predominant expiration is June 2022, being very, very bearish. So let's go back and filter some more premium. So we already did that. Let's go into the 15,000, lower it a little bit, see what else we get, what kind of breakdowns we get. So 1119 still bullish over bearish. Now that you see that the June 2022 at $15,000 premium is now more bullish than bearish. And then at what strikes? Again, the 40 stands out, the 6750 and the 70 also stand out. The 67 and the 70 are almost neck and neck, the 67 outweighing just a little bit more than normal. Specifically, I also like to go in here and take deep in the money out of question, so that way I know people are not playing just for delta. These are people that are actually interested in the play itself. So then we get a little bit more consensus of neutral, essentially nothing more than the other. Obviously the June still stands out as very bearish, but now take a look at the call side, at the bullish side. 70 is now the predominant strike, right? When you eliminate deep in the money, okay? So now we can formulate an opinion, all right? So some people feel that this is still bullish. Now, let's get out of the money only, right? And now we have pure speculation. So this is just people speculating on the price. We are more bullish than bearish, specifically for all strikes, right? Including June's. And when you go to the strikes, the ones that stand out the most are 57, 60, and 70. So at this point, I can pretty much formulate an opinion that this is pretty bullish. There are some pretty big bets going into this 125,000 call bot, right, for January. More recently, 1119, 17,000, 53,000, 17,000, 16,000, 88,000. Right there is some pretty significant amounts of cheddar going into this for relatively close strikes. Again, it's a little bit mixed. You have a little bit for January, a little bit for June. You have some for November 19th, but for the majority, the consensus is bullish, right? That this will continue going on a bullish trend. To kind of give you guys some smart money projections before I go back to the chart, just real quick, Nasdaq, we like to use Nasdaq because again, they give very good ratings. Normally, you see a strong buy rating. You see 4 analysts covering: Piper Sandler, Raymond James, Stifel, and Wedbush. Consensus is $70.94. Remember, we are trading today at $54.60. The low being 58, so that's out of the question. So really, we're only talking about the average and the high. Average being $70.94, the high being 95. Well, I don't always like to formulate my opinion on just one website, so let's go to Marketbeat and take a look what they have to say. As you guys can see, the low for them is going to be 54. Again, we're basically already sitting there at 54.60 today. So we're really talking about the average being 70, $20 per share gain, or 95 being the high according to them. As you see, they have 31 analysts covering this, all rating a buy. I believe there is 0 sell. Yeah, there is no sells on this ride share. There are some holds, but for the most part, it is a majority consensus of a buy on this specific ticker for LYFT, right? With 28% upside, 41 or 7.53. In either case, the point is there is potential of upside in this play. Specifically going into institutional ownership, as I always like to show you guys who is holding what. First and foremost, take a look. Way more buys than we have sells in all quarters, exception to the current one, right? We have had a little bit more selling than buying, but that doesn't mean people aren't still holding major stakes. Take a look. And we go down this list. Alliance, Iridian, New York State, California. There's a big diversity of who is holding this specific play, right? You have Raymond James. Again, there are major stakeholders in this position. Also, what I want to bring you guys' attention when you go down this list and looking, pay attention to the increases and decreases of position. When you see parties taking very large increases in position, that should tell you something, right? They're super bullish, especially where they're coming from and who they are, like a teacher's fund or a state pension fund, right? Those are all things you kind of got to put all together in formulating an opinion when you decide to make or pull the trigger on an investment, right? But as you guys can clearly see, there are a significant amount of institutional investors holding this play for the majority, mostly holding, not so much selling. There has been some selling, but nothing major that we would need to worry about in any way, shape, or form, right? And this list goes on for a while. So that kind of formulates your opinion on smart money and where it stands. Going back into the ticker, now this is a 1-year breakdown. Let's go into some of the indicators. As you guys see, we are currently in a buying period in the MACD. Our RSI is sitting directly below overbought at 60.8, right? So it has cooled off a little. Obviously, with today's massive or yesterday's massive dip with the inflation scare, that did help cool off the RSI, which gives us more opportunity to run to the top side. You see that the accumulation distribution with the inflation scare, people did take some profits. That's why you see the line heading down to 0, meaning money is leaving the play instead of going into the play. But take a look at our average true range down here, throwing us a $2.48 swing. Otherwise, for all my option players, you know that is essentially giving you a $5 swing to the top side or $5 swing to the downside, right? As it doesn't tell you direction, it just gives you size of potential swing. So when we're looking at this play, taking a look at the flow, taking a look at the price targets, now taking a look at the candles on the chart, where we are relatively compared to the high shelf and the low shelf of volume, point of control being here. Obviously, we know that the play is fully capable of achieving these areas up here in the high 60s because, number one, it had already been consolidating in this channel from essentially March all the way through April. And then again here recently in late summer. Obviously, we have this respected downtrend, right? But if you pay attention, we are ready and getting ready to break this trend. If breakout of this trend were to happen and we were to make a push to the upside, as I feel we might, this might break back out up into the higher 60s. For that, how can we basically make that determination if that is the case? Well, first and foremost, pay attention to the alerts for this Friday, right? That is a sense of urgency, right? That means it's short term. People are slapping the ass, throwing money down, and not hesitating or guessing. For those full transparency, I did buy on the alert. I took one look at the chart, formulated the trend, saw that I was bullish, saw that the indicators were mostly in my favor, and I immediately bought straight on the specific alert. Right, so I bought in at the 61 call. Didn't even think twice. Unusual Wills doesn't let me down. I have full trust in them and the information they give me. They have earned that from me because, again, I've been so successful in so many trades. And if you are curious to see what those are, you are more than welcome to go to my IG, Stock Hustle 2021 on IG, or WLara85 on Twitter, and you can see some of the posts of my successful trades that I've shared with not only the usual Wills but also the community on Twitter. So I did buy specifically at the alert. I wanted to pick up some more contracts tomorrow. I may end up picking up more of these 55s or 54s as they're going for right at $100 or anywhere from $86. To me, that's not a lot, but what I do like to see is high concentrations of volume at higher strikes, as you guys do see here at the 61, 14,400 volume on 198 open interest. When we're looking at the put side, it is not even anywhere near close, right? So there's no challenger to the call side, meaning that it is heavily bullish to the call side. If we have a bounce back day today, I totally anticipate us breaking this trend potentially and shooting up to the top side. Again, in my opinion, this is a low risk, high reward trade, as again, $100 to me is not significant money. So the risk versus reward to me is fair, right? But this is my opinion. Please don't treat anything I say as fact. Please do your own DD. Please do your own research, and please formulate your own opinion as always. But I think you guys get the point. If any of you have questions, please don't hesitate to leave it in the comments down below. Don't forget, I will leave the financial reporting in the details of my video if you guys want to take a quick peek at that. Otherwise, guys, you can always hit me up on IG or Twitter. And until then, guys, I'll catch you in the next one.